Now it's time to look at the stock market action today in Korea and around the world. And for that, we're joined by Daniel Yoo, global strategist at Kiwoom Securities. Thanks, Mr. Yoo, for your time this afternoon.
Thank you.
So U.S. stocks backtracked on Wednesday, down around 0.1%. It seems like investors are still factoring in the risk of a recession, and a factor related to that, the yield curve, which is still upside down.
Yes. The inversion of the yield curve continues as the U.S. government bond 10 years yields continue to decline. If you look at the benchmark of U.S. 10 years yield, it is currently at below 2.4%. To be more specific, short-term rate, 3-month rate is at 2.44. U.S. 6-month is at 2.47. So clearly the inversion has occurred. However, though, more important differential, which is 2 years and 10 years differential, it is indicating around 13 basis points. Actually, it has risen slightly to 17 basis points at the current point in time. During the dot-com bubble era of 1998 to 2000, the differential between 2 years and 10 years also maintained at around this kind of level for a very long time. And during that period of time, the NASDAQ index soared more than 200%. So the current point in time, the more important factor, once again, is loan-to-deposit ratios. It is well below dot-com bubble period, and it is currently at 77.4%, which is very low. So we think that the recession worry is a bit overplayed at this point in time.
Right. Well, there was weakness also Wednesday in the main European markets. What's affecting Europe, and where does Brexit fit into that?
Right. If you think about European markets in general, Europe had a crisis started at 2011 when there was sovereign debt crisis. Since then, it's been trying to solve the non-performing asset problems for the last 9 years. But the level of the changes that are occurring is about not writing down the NPLs, but just solving the problem on a longer-term basis, which is providing provisions. So this is the reason why the Brexit is occurring, because Britain doesn't want to provide money for the problems of the Europe as a whole. However, though, we don't think that this will lead into a massive recession of European economies, because most of the economies were providing high-level provisions for the non-performing assets for the past 9 years. So we don't think the problem is that big, but nevertheless, because of the speed of solving the problem is very timid, and Brexit results are not going to come in anytime soon, this will have some negative impact in terms of overall economies in Europe.
Got it. Now, what has been the effect of these movements in Europe and America on Korean stocks?
Yes, Korean stocks were down continuously yesterday as well as today. Also, most of the Asian markets were down because of the decline of U.S. as well as European stock market. For now, the concern about the trade war between U.S. and China is the ongoing process is making the Korean market to be quite timid. Nevertheless, if you look at global valuation, it is very cheap at the current level of interest rate. Particularly for Korean market, it is the cheapest market in Asia as well as global market. So yes, there are concerns about the economic recessions and problems of the futures, but in terms of the valuation, in terms of interest rate, equity markets start to look quite cheap.
Okay, perhaps some reassurance there for those investing here in Korea. Mr. Yoo, that's where we'll have to leave it today. Thanks for making time this afternoon.
Thank you.